Have you ever heard the advice, invest for the long term? But why is that? The answer might surprise you. Data suggests a shocking fact, a 0% chance of experiencing zero returns in the Indian stock market if you invest for at least 5 to 7 years through SIPs. That's right, 0%. But how is this possible? What's the secret that helps SIPs conquer market volatility? The stock market can be thrilling, but also unpredictable. Ups and downs are inevitable. If you invest for just a short period, a market fall might leave you feeling lost at sea. You might even be tempted to panic and sell, locking in losses and potentially missing out on future gains. This is where time becomes your greatest ally. By investing consistently through SIPs for at least 5 to 7 years, you allow yourself to ride out those market fluctuations. Here's the magic: imagine buying groceries. Sometimes, vegetables are expensive, and sometimes they're cheap. With SIPs, you are essentially buying investment groceries consistently. Historically, the Indian stock market has delivered positive returns over any 5-year period. This means by staying invested for the long term, you significantly reduce the risk of negative returns. As you can see, the 5-year XIRRs range from 8.90% to 17.40%. This highlights that while the market can fluctuate, staying invested over the long term helps smooth out these fluctuations and increase your chances of positive returns. Market volatility is a fact of life. But with SIPs, you invest a fixed amount regularly, regardless of the market's mood. This is called rupee cost averaging. This way, you automatically purchase more units when the market falls, potentially at a lower price, and fewer units when the market is high. Over time, this evens out the cost per unit, smoothing out the impact of volatility. Now, let's talk about compounding, often called the eighth wonder of the world. It's like earning interest on your interest. With SIPs, your investments not only grow with the market, but the returns themselves start earning returns over time. This snowball effect significantly boosts your long-term wealth creation potential. By staying invested and disciplined with your SIPs, you ride out the storm and benefit from the market's long-term growth potential. Long-term investing is all about planning for your future. With SIPs, you can invest towards various goals, from retirement planning to a child's education. Remember, the stock market rewards patience and discipline. By investing consistently through SIPs for the long term, you can leverage the power of time, rupee cost averaging, and compounding to achieve your financial goals. Don't let short-term market fluctuations deter you from your long-term vision. Contact PA Wealth to get started on your journey to wealth creation.